Hello, FX Limit fans. Today, we're diving into a fascinating aspect of Forex trading, the Renko charting technique. This unique method is all about filtering out market noise and identifying potential trend reversals, crucial for making informed trading decisions. So, let's get started. First things first, what exactly is a Renko chart? Unlike traditional charts like candlesticks or bar charts that plot price movements over time, Renko charts focus solely on price movement, disregarding time and volume. The word Renko originates from the Japanese word renga, meaning brick. Just like bricks in a wall, each Renko brick represents a specific price movement. Here's how it works. You set a predefined brick size, say 10 pips. A new brick is only drawn when the price moves up or down by that amount. If the price moves up by 10 pips, a new brick is added above the previous one. If it drops by 10 pips, a new brick appears below the last one. The key here is that the bricks are always uniform in size, making it easier to spot trends and reversals. Now, how does Renko help in filtering market noise? Since Renko charts only record significant price moves, minor fluctuations that often lead to false signals and other chart types are filtered out. This clarity is a game changer. You can more easily identify true market trends and smoother patterns, avoiding the pitfalls of overreacting to insignificant price movements. Let's talk about identifying trend reversals with Renko. One of the simplest ways is to look for a change in brick color. If you're seeing a series of green bricks and suddenly a red brick appears, it signals a potential downward trend. Conversely, a green brick after a series of red ones could indicate an upward trend reversal. But wait, there's more. You can enhance Renko charting with other technical analysis tools for even better results. For example, combining Renko with moving averages or trend lines can help confirm trend reversals. When a Renko brick crosses a moving average or breaks through a trend line, it often signals a strong trend shift. Another powerful combination is using Renko with indicators like the Relative Strength Index, RSI, or the Stochastic Oscillator. These can help validate the strength of the trend indicated by Renko bricks. For instance, if Renko shows an uptrend and RSI is above 50, it strengthens the case for a bullish market. But remember, no technique is foolproof. While Renko charts are excellent for filtering out noise and identifying trends, they're not without limitations. Because time isn't a factor in Renko charts, they might not always align with real-time market changes. So, it's crucial to use them in conjunction with other analysis methods and stay updated with market news. In conclusion, the Renko charting technique is a powerful tool for any Forex trader. It simplifies price action, filters out minor fluctuations, and helps highlight significant trends and reversals. When combined with other technical analysis tools, Renko charts can significantly improve your trading strategy, leading to more informed and confident decisions. That's all for today, FX Limit fans. I hope this deep dive into Renko charting helps you in your Forex trading journey. Remember, trading involves risks, so always do your homework and trade smart. If you enjoyed this video, don't forget to like, share, and subscribe for more insights and tips. Happy trading, and see you in the next video.